Bitcoin almost went back above 91K. Is this the rally that I was talking about could happen in January, or is this just going to be another false breakout? Let's find out. Welcome back to Flex Candle, where we read the candles and flex the moves. Right now it's about 5:30 p.m. Eastern time and the price of Bitcoin is currently at 90,142. And before I go over the top-down analysis, I want to go over this winning trade I gave you guys yesterday. Left you guys yesterday here around 88,300, and I was telling you that this could be a possible double bottom on the 4-hour chart, with the measured move taking us almost to about 91K or higher. We did not hit the exact measured move of 91,716, but we went up as high as 90,972, basically 91K. That's about a little bit over a $2,500 winning trade. So congratulations on whoever took that trade. This is a big win for the Flex Candle community. Now let's head over to the 3-week chart. This candle closes in the next 2 days and 2 hours. Right now we're starting to get a green candle. If we could stay green, maybe this could be tweezer bottoms and we could start making it up towards this 21 moving average at 100,540. The stochastics RSI are low enough that it looks like we could reset and go back up. On the 2-week chart, this also closes on Sunday. We're holding above this 50 moving average, which is important. Once again, this looks like it wants to continue going up on the stochastics RSI. We can make it towards this 21 moving average. Now the weekly chart looks a little bit bearish because it looks like it wants to roll over, but at any moment we could start going back up. The RSI is starting to turn up as well. We're holding this 100 moving average, and now it looks like we want to start getting above this 80 moving average. In order to do that, we have to get above 91,537. I'll be happy with a candle close above this 80 moving average, and then slowly we could work our way up towards this 50 moving average at 101,631. Now the other time frames on the 3-day chart, this candle closes in a day and 2 hours, and so far we're trying to hold above the 200 moving average. If we could do that, this could be some type of a double bottom that could bring us back up maybe to around 97K. The only thing, the stochastics are starting to get a little toppy, but we could always drag here and continue to go up. What's bearish is the 21 moving average is trying to go down, crossing the 200 moving average. That is usually bearish, but as long as we can stay above this 200 moving average and cross this 21 moving average, this could become bullish. On the 2-day chart, talking to you guys here about a double bottom. In order for this to happen, we have to close above the 21 moving average. This candle closes in about an hour and a half, so we want to come back and check if this candle did close above the 21 moving average. If so, then we do have the possibility to go up towards this 50 moving average, which is at 99,932. Stochastics are getting toppy, but once again, we could drag here a little bit before coming back down. On the daily chart, we see that the stochastics are toppy, but if we could close this candle above this 50 moving average, this could start to get bullish. I was telling you guys in prior episodes that this could possibly be an inverted head and shoulder, with this being the left shoulder, the head, and this is the right shoulder. This measured move would break us, close to this 80 moving average. That's at 96,188. So look out for that unless we roll over. Now the other time frames really quickly, just looking at the stochastics RSI, the 22-hour chart is starting to get a little toppy. The 12-hour chart, we still have a little bit more room. 10-hour chart, a little toppy. 8-hour, we could still make it up here. Once we're above these moving averages, this usually wants to gravitate towards this 200 moving average. Even if we get rejected, that's currently at 93,565. Now what's important here is that we finally got above the 200 moving average with more than one closing candle. If we see every other time that we got above the 200 moving average, we went up one, and then the following one we rolled over. Over here we went up one, the following one we rolled over here. Right now we have a shot to continue going up because we closed one candle, 2 candles, and this new candle here closes in an hour and a half. If we could close this one, that'll be 3 candles above the 200 moving average. This could help us continue going up. This is where the double bottom played out. Now the stochastics RSI are a little toppy, so if we start to roll over, we have to hold above this 200 moving average, or at least this 21 moving average, and this could turn into some type of a cup and handle play if that ends up happening. If this is going to be the big test, if we cannot hold the 200 and the 21 moving average, then we're probably going to end up rolling over, again showing weakness that we can't hold above the 200. But if we roll over on the stochastics RSI reset, and on the way up we're still holding above the 200 moving average, I would start expecting a bigger move up, possibly to go test the ultimate resistance at 94,500. Now on the 1-hour chart, stochastics RSI are resetting here. We're still above the 21 moving average. Now we have to keep in mind, this kind of looks like a head and shoulder, left shoulder. This could be a head, this could be a right shoulder. This also kind of looks like a diamond pattern, and they're going to break down the way they came in. So if it came in from the bottom, it's also going to leave from the bottom. So we could end up coming down. I'm just giving you guys all the possibilities because anything could happen. Yesterday I gave you guys 2 possibilities on the 4-hour chart, and a bullish one did play out with the double bottom. On the 15-minute chart, stochastics are getting toppy again. again. This looks more clear here. Left shoulder, head. This could possibly be a right shoulder. If we start losing the 21 moving average, we're seeing some wicks. We have to hold above this 200 moving average at 88,611. We lose the 200 moving average, we could have more downside. You can see more clearly here. This also kind of looks like a diamond pattern that could break us down. So a lot of it, I would say, has to do with this 4-hour chart. Let's see what ends up happening. Let's see if we can hold above this 200 moving average. If we can, I do think we will have more upside. If we can't, then I do expect more downside. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.